Welcome to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. Whether you're watching us live on YouTube at TradeEZ or listening on your favorite podcast platform, we've got you covered. Subscribe, join the community, and get ready to dive into real talk and real market insights. Let's get started.
Hey everyone, I'm Stephen Kalayjian and welcome to the Bull, the Bear, and the Ugly. I told you volatility is here, and boy oh boy is it ever. Today we had the employment number come in a little bit hotter than expected, 4.1, and the S&P futures in the early mornings were trading around the 57.86.5, and we dropped over 110 points on the S&Ps. After that number, S&P futures got all the way down to the 56.73. NASDAQ broke 20,000 and got all the way down to the 19,763 mark. You know, the big number for today, I'm going to show you, is the spiders, 574.58. Right now, we're at 574.23. If we get that number to close on the weekly charts below 574.58, the weekly charts will reverse to sell for the first time since the uptrend started September 17th of 2023. And I'm going to show you unbelievable patterns today. Two triple Lindys, that is a buy divergence in a negative trend or a buy divergence in a disconnect. Guess what? They each ran about 30 to 40 points. One ran, I think, 30. The last one ran about 40. Unbelievable buy divergences. All the strategies that we have that I look at that I've created are all predicated on buy and sell divergences. And look at this right now. The spiders are ticking right now, 574.50. And with the number, I swear, like they know this number. They know if this number, if the spiders close below the 574.58, we're right here, right now, that the weekly charts will reverse to sell. And I can't wait to show you. Look at them go here. S&Ps just rallied just now 30 points. S&Ps are moving 30 points. NASDAQ's moving 50 to 80 at a clip. The volatility is insane. We're well off the lows. I said the lows are in for the day because the 15-minute time frames reverse to buy here on the spiders, on the Qs, and on the Russell. All right. And the diamonds as well. So what to expect here now? Well, I think the lows are in for the day. We'll go look to buy some pullbacks in the next 2.5 hours. But again, look at this number, 574.60, 574.58. We're right here. And let me show you what I'm looking at here. Okay, bringing up the spiders here on the weekly charts. You think they don't know my numbers? I'm telling you. Look at this. The number was right here. They were ticking right here. Look at this. 574.52 is where the weekly charts reverse. And this pattern right here, okay, this pattern right here is the pattern that if we close below that number, we will get a monster short on the market for the first time. Okay, for the first time since, like I said, the September 17th, right here. All right, looking back on the spiders, since this move right here, since September 17th of 2023, this is a monster look here. Okay, and if you look here overall, you can see right here, we were actually touching below this, the low here on the spiders today, 565. We have rallied 90 handles off the low, 90 handles off the low. This is an unbelievable pattern. Again, the market on the bigger time frames here, let me just show you the daily. At the point when we rallied, we were 24, 9 off the lows, 24 points from the 10-bar moving average. The standard deviation for this is 5. We were 24. That's why you're getting this big oversold rally right now. Now, we're not out of the woods yet here based upon my work. However, what I'm seeing, okay, this is a very bearish pattern. The ADXs are rising on the dailies. This is a pattern here But I do think we're going to do this. We're going to push up, okay, down, push up, down, push up. Eventually get that daily to an overbought condition, all right? And then I think they really push them down. It could get down to the 54.80 on the S&Ps, maybe the 55.50, 55.30. But once these weekly charts right here, if you look at the weekly spiders, this is what I'm looking for. I'm looking for to see these MACDs. When we were making new highs here, right here, the MACDs could not confirm the highs, right? So when you see something like that, and then what you want to do is you want to get these MACDs to come below the pivot, and then we're going to cross back up. And if you look at the monthly is still very bullish here. All right, the bigger time frame, 537, that's 5,300 on the S&Ps. But guess what? What we're looking for here is to get these weekly charts, right? Get these weeklies, get these MACDs right here. Now, you see it touching again here? You see it touching right here? This is the number. We just dropped. If we close below this number, 574.52, this weekly will reverse the sell. All right, we're going to get the dailies to get some type of an oversold condition, which I think we're going to get probably very soon. I want to see the dailies get into a single digit, which means like below 10. And then I think we bounce nicely here. But then I think what we're going to do is get another push up here. There's a ton of overhead resistance here, a ton of overhead resistance. All right. And then I think what's going to happen here, we get a push up, a push down, another push up, another push down. And then I want to see these weeklies, these MACDs. You see how when I say MACD below the pivot, you see the MACDs below the pivot. This is my pivot line right here. You see this? I want to see how the dailies are that. I want to see the weeklies below the pivot right here. I want to get these weeklies to look like I just showed you, get them right here, but get them below my pivot line, and then I think we're going right back up. So this all pure mathematical. S&Ps just rallied 35 and then just dropped 15. The markets are extremely volatile. And, a lot of fundamental traders and PMs, in my opinion, I've been doing this over close to 42 years. A lot of people don't even know how to trade these markets. But guess what? The people in my community, they learn from me. I guide them, I educate them, and that's the most important aspect of trading. To be able to identify the conditions, my 5 conditions, a trend, a buy reversal, a sell reversal, a correlation, and a disconnect. And if you can understand these conditions and understand the strategies that go along with these conditions, I have buy and sell divergences. So 5 conditions, 10 strategies, like I constantly say. Everything I do and I teach is based upon visualization and repetition. But the most important thing is to be consistent, ask the questions. So many people who join me today are so new. They were asking me about what's a long, what's a short, and that's fine, no problem. I talk to you the same way as if I know you for 30 years, if you're an experienced trader or if you're someone who's new. It doesn't make a difference to me, right? It just makes a difference that you learn, you grasp this, and you're able to learn an effective way of trading. Remember, there are about 1 million people who sit in front of a screen each and every day. And the people that I'm in my community do that right now. And in the future, I hope to be building more automated technologies for those who can't have that ability to sit in front of a screen. Let me show you some really great patterns here in the morning. The first pattern that I want to show you right here was off the 15-minute time frame coming in this morning. When we got the first push up this morning at 10 a.m., I saw right here that the 15s were getting way overbought. Now, if you look at the 30-minute time frames right here, okay, you can see the 30 minutes were getting overbought into the negative MACD. That was the first signal for the short right there. All right, that was the first signal for the short. The second right here, you can see the negative MACDs on the 60. So when the 15-minute time frame got overbought early in the morning, right around 10 o'clock, you can see the 576 on the spiders. Look at the significant drop that we got. Just absolutely dropped significantly all the way down. Look at this, to 565. Dropped 110 points, dropped 11 on the spiders. And then when we got the deep oversold condition, right, we caught a couple good longs, right? And then once the 15-minute time frame reversed to buy here, all right, the positive MACDs, I knew that the lows are in for the day here. The lows are in for the day. Now, the big numbers to watch here, okay, is right now is the 575.29. If we get a buy reversal here on the 30-minute time frames, well, then I think that low of 56.73 and 19,726 should hold for a while. But again, here we are. Look at how the number is gravitating right to that weekly number. I'm telling you, that 574.52. Look at this. Now we're 20 cents up. Okay. So what I'm looking for here, okay, is to see if these 30-minute time frames can reverse, and then we'll look to get pullbacks here along the way. And that is exactly what we're looking for here. Okay. But we're going to see this play out. And it's just amazing how the market just knew my number, that 574.52 level. Right now, we're right there, exactly right there to the point. So it's going to be a tug of war, right? You know, I'm like so dumbfounded at times, like how the markets know my number, right? And if that number does get violated, that weekly chart will reverse to sell. So with that being said, it's all about now identifying the patterns. There is a slew of great patterns that happen today, longs and or short. Let me show you a Triple Lindy. This is a strategy I created, and I named it a Triple Lindy because of the movie Back to School, and it really resides right here. This is the pattern. Normally, what you do is a Triple Lindy is a buy divergence, okay, in a negative trend or in a disconnect. All right. So normally what you do is the market rallies, you short it, right? When the 5-minute time frame reverses to buy, and then you look to buy the pullback. Now, a Triple Lindy could do two things: set up the short on the 15 or get the buy reversal on the 15. And bingo, it pushed up so much that you got the buy reversal on the 15-minute time frame. And let me show you right here. So the Triple Lindy, okay, the 5-minute time frame reverses to buy. We caught some really great shorts right here on the underlying ETF right here, really nice. And then boom, you can see the drop all the way down to the 969. So the S&P futures got down to the 5713 level, and I'll show it to you. And then the Triple Lindy is always off the 3-minute time frame, and here it is. Look at this pattern right into my 10 bar, the 3-minute time frame, push down, never look back. Look what they did. 569.64. Boom. They rallied almost 40 handles on that pattern. That is an unbelievable pattern on the S&P futures. The Triple Lindy, in this example, pushed the index and the ETFs to reverse to buy. So now there's a high probability of over 84% that the lows are in for the day. Again, pure mathematics. You know, during this whole move up here, we have Avago now making new intraday highs after the good earnings. Now, Avago was trading $199 in the pre-market, traded all the way down, okay? And look what Avago did here. Traded all the way down to like the 182 level. And now look at Avago. Avago reverses to buy here on the 15. You can see the big MACD positive. Now the 60-minute reverse to buy, and you buy the first pullback on the 5-minute time frame. Avago, look what Avago just did. Just ran over $3 here. So again, the 15 reverse to buy, it correlated. Let me put the 5 up here. This is the 5-minute pullback. You can see the 15 reverse to buy. The 60-minute, the 30-minute was already in buy mode right here. So now the 15 reverse to buy, it correlated with the 30. Now look what Avago just did. It just reversed to buy in the 60. So the trade right now that I'd be looking for is the pullback on the 15-minute time frame right here. When we got it right here, it's to buy the first pullback on the 15. Positive MACD, rising ADX. So I want to see Avago pull into here, get somewhat oversold, look like something like this for another move up here. These are great patterns here. Lily has been in a significant negative trend here today. Lily, all right, Lily's been down pretty much most of the day here. All right, it was down over 50 at one point here. You can see Lily. Let's see, Lily reversed to sell here on the 60-minute and the 30-minute time frame. And now you're getting a little bit over. Here's the 60. Okay, you can see this is the push up yesterday, right into the close. Lily gap down, caught some really nice longs here off the deep oversold condition, but I'm setting up a monster bear flag here on Lily. And what we want to see here now is the 15-minute time frame getting overbought. To me, this is a huge this is a negative pattern here. I'd be looking at short Lily here, right up to about maybe the 879, 880 level. And you can see here, based upon the 30-minute, negative MACD, rising ADX, big selling pressure on the 60. Look at the 30-minute. Look at the 60-minute. Even worse, negative MACD, rising ADX. Where are they going here? So Lily, I think, is in trouble here in the short term as well. And Netflix, we had this Netflix near the lows. Netflix, we were around the 873 mark. Look at the low, and Netflix got down to 758. Netflix at one point today on the 15-minute time frame, this is where we were buying it, right around here. And right around here was it, I think it was right around here, 72, 71. Look at the Netflix rally off the lows. Almost, look at this, 22 points off the lows. S&P's now pushing up. Look at this. Right now, they're above the 575. So there's probably an outside chance here that the spiders are not going to reverse to sell on the weekly charts here. Pretty amazing if you ask me here. Pretty amazing if you ask me. For me, I think that what you're looking at right now is just a deep oversold condition here. Okay. And what you want to be able to, there goes Avago making new highs. So when you see these patterns like this now, and the spiders might reverse to buy on the 30-minute. So I would be looking for the rest of the day. If we get any type of a pullback on the 15-minute time frame, I would be looking to buy the pullback on the 15 here. When you see these patterns like this, and these patterns tend to repeat themselves over and over again, I want to just show you Coinbase. Coinbase reversed to buy on the 15-minute time frame, and the 15-minute time frame you can see lined up with the 60-minute. Now the 30-minute is still negative here, all right. But look at when the 15-minute time frame reversed to buy right here, okay, correlating with the 15. And then what you look to do, you look to buy the first pullback on the 5-minute time frame. This is a really beautiful long here. And Coinbase ran $3. These are set strategies here. These are set strategies. All my strategies are based upon combination methodologies. All right. So much to show you. Unbelievable patterns today, all day long. When I get back, I will tell you what I'm thinking is going to happen on Monday. Okay, so it all is going to depend on this weekly, but really not so much as far as where we go from here overall. Overall, the pattern is still bearish on the daily charts. But again, the number here, 574.52 is a very, very big number here. Now, what I'm expecting for Monday, all right, is I'm looking for the market to be in, again, I'm still looking, if we rally, there's a ton of overhead resistance on the daily charts. I think it's going to be met with a brick wall. Maybe not this week, maybe today, maybe not next week, but these dailies, these weekly charts, if they reverse, I'm telling you, lights out. You take the measured move of 61.66 on the S&P, you take it to this number here, 574, all right? So that's probably right now 400 points. You're probably looking right there about, I would say, the S&P futures around the 53.50, 54.50 range. You take the measured move and you take, so we went from 61.66 to the low, and we're probably at, you're going to take a look at 400 points from that level, 574. So 50s. Yeah. So you're probably looking right now at a move down to maybe the 5350, 5400 on the S&P. It's going to hold above that monthly, which I showed you. And then I think then the weeklies will be below my pivot line. And then I think we head right back up. So what I'm looking for tomorrow, for next week, I'm looking for Monday for a great pullback on the 30-minute time frame in Avago. Monster pattern, earnings are out of the way. Great stock. Dust is settled, boom, right? We're going to buy the pullback on Avago, especially after the 60-minute time frame reverse to buy. That's one. All right. I think there's going to be a lot of stocks here that are going to be setting up short patterns on the daily. So we're going to wait for the oversold condition to play out and then look for the market to get a push up and then push down again. If the weekly reverses to sell today, closing below that 574.52 level, that will be the big catalyst right now. If it doesn't, and we push up next week and we work off that oversold condition, and we get to an overbought condition, I would be looking to short the market probably anywhere if we get up to the 58.80, 59.30 period, 59.50. Again, ton of overhead resistance, and I think then we drop from there. So that's what I'm thinking going forward. Again, right now we still have about 2 hours to go to let us see what the market's going to do. Again, Avago, I think, is going to be a great long next week. I think the spiders, if they reverse to buy right now on the 30-minute time frame, closing above the 575.21, I think then we'll look for pullbacks here. Either way, on the 15-minute time frame between now and the close, and on Monday we'll look for a pullback on the 30-minute time frame. All right, when I get back, another unbelievable story I have to share with you from one of my traders in my community, and a lesson to be learned that I want to teach each and every one of you. Okay, so yesterday Avago was trading around the 179, 180 level, and I thought it was a buy for a trade. And the individual really just, in my community, unbeknownst to me, texted me today, Avago's up trading 199 in the pre-market, and the gentleman had bought an out-of-the-money call, a 190 call. The last sale is 179, right? Yesterday, and buys an out-of-the-money call. This is why most day traders fail, right? To me, that's gambling. You're going to buy something, right, that is $11 away, right? Granted, if you think the earnings are going to be great and you're gambling, you're doing whatever you can with your money, right? Then why don't you just buy a deep in the money call, right, or at the money call, right when the market was right there? If you thought so, then when the stock gapped up, right? When the stock gapped up, guess what? In the pre-market was trading 199. When the market opened, it was trading 188. It dropped 11. How they don't let people trade options in the pre and post market is beyond me, right? So that's one thing. Second, what I don't understand is why you would buy an out-of-the-money call, okay? 10, 11, a strike of 190 with the last sale 170, 179. To me, that makes no sense to me. And with that being said, for me, I think the most important thing is that if you're going to take a trade, and then you have the overnight decay on top of that. That to me is really something I wouldn't really do here, okay? And it just because you have the overnight decay, and guess what? Let's say the earnings and the stock was up 5 or 6 or 7, okay? You would have lost anyway. The person who ended up doing this trade ended up losing on the trade because of the price decay overnight. And when it opened, it traded down to 185, 186, and then shot up like to 191. And by the time he even tried to sell it, okay, he had lost. So to me, it's not a really prudent strategy. If you're going to trade options, learn to trade or the at the money calls or the deep in the money calls. To trade in the money or out of the money, I don't know. To me, I just think it's a waste of time, and I just think you're just throwing your money away. All right. So with that, that's the lesson that I learned last night from a gentleman, and I can't tell anybody what to do, but for me, it just registered to me that I just want people to be more prudent with their trading and understand the risks involved and trading out of the money calls, especially into earnings. I never did it, but I can't tell people what to do. But again, with that, I think it's important for everyone to understand the risks involved in trading into earnings and trading out of the money calls and puts, especially with the overnight decay. All right. I'm Stephen Kalayjian. Thank you for joining me here on the Bull, the Bear, and the Ugly. Obviously, we're in a bull market right now here today. We're up over 100 points off the low. Please subscribe to my YouTube channel. Join me on X at Steve Kalayjian. Come join my community each and every day. So many people from around the world are joining me. Love to teach all of you. There's no greater joy in being able to trade the markets effectively, be consistent, and to be able to knock the ball out of the park. But more so to learn from me with my close to 42 years of experience. Again, you could text me or call me at 914-500-7484. Again, join my community. So many people are doing so well. I'm so proud of so many people from all around the world. They want to learn. Remember, if you put the work in and you're dedicated, great things will happen and success will come your way. God bless you, everybody. Have a great weekend, and God bless the United States of America.
Thanks for tuning into the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. If you enjoyed today's episode, be sure to subscribe on YouTube at Trade EZ or on your favorite podcast platform. We'd love for you to rate, review, and join our community for more real talk and market insights. Until next time, keep trading and stay sharp.